Hey everybody, Brad here with another trade recap, this time on US dollar Japan. So let's jump right into it. So basically what I was looking at here was this overall ascending channel. We had the impulsive break, and just seeing that from a momentum standpoint, seeing a lot of momentum to the downside. We did get this spike from the flash crash, and initially what I've been viewing this as is impulse correction. Impulse to the downside is a continuation, but that still remains to be seen. But that is the kind of overall reasons for the trades that I was taking. So if I jump down to the 4 hour, again, what you'll see is this impulse move to the downside. From a 4 hour perspective, we're just more or less correctively trickling our way to the upside with no real impulsive moves or clear bear bull flags, things like that. So ultimately, again, factoring that in, that's why sells were what I was looking for. So if I look on the hourly, take a look at this first trade here. Again, price is really just not showing any clear signs of movement to the upside. So still keeping that bear bias heavily there. So if I jump down to the 15 minutes, first trade here, what I was seeing was this overall basically rising wedge formation. Price is just kind of correctively moving to the upside and starting to trickle its way down. So what I did was I set an entry order basically to take me into the trade if it broke, just factoring in this low here. And what you'll see, price tagged me in. We started to see impulsive movements to the downside, but then price began to get very corrective, almost in this descending channel-like formation. And that was ultimately, at this point, I was already about 1% in profit here, so I did move my stop loss to break even, just to kind of hedge my risk. And what you'll notice as soon as I throw that on, this impulsive candle here tagged me out for 0.1%. So we'll jump into the next trade here. And essentially what I started to notice is price was creating these overall ascending channel, got a break, and then started to form this more bear flag type formation. So essentially you just have this impulse correction, looking for the impulse to the downside. If I just quickly jump up to the hourly, it's a little bit more clear from an hourly perspective, just overall correction to the upside, and then just this overall trickling, very low momentum right here, struggling to break the highs. So just looking to capitalize on the momentum to the downside. So essentially, if I jump right into this trade here, what you'll see is, again, just set a reduced risk entry, factoring in kind of this previous low here, and was tagged into the trade right there. Price impulsively moved to the upside, and it was at this point I got to work, seen the charts, decided, what do I normally do? Let's lock some profit in, secure the trade, risk-free, move on. And as I kind of started to watch it progress throughout the day, just really strong impulsive nature. So it was at this stage I decided to lock in just a little bit more profits. Noticed that there was a little bit of a correction here, so decided, this would be a great point to just give the trade enough room to breathe while also maximizing kind of the return that I would get on this overall trade. So again, price is impulsing, get a very clear impulsive candle there, and it was really at this stage here, just shortly after that, yeah, right here. So we got this retrace candle, decided, this was a very heavy impulsive move to the downside. I'm gonna secure some overall profits. So I moved my stop to about here, which was an even 5%. So at the end of the day, even with this being an incredibly ambitious tight trail stop, I was fine with 5% on the move, especially having a 12 pip stop. I definitely don't recommend that. This comes with kind of my scalping background and the fact that I traded US dollar Japan solely for over a year and a half. That was the only pair I traded, so definitely a little bit more comfortable with this pair. And what you'll see is, as no surprise, price popped up, tagged me out. No big deal. Overall, very happy with the way this trade panned out, because as you can see, price just began trickling to the upside. So overall, from a management perspective, very, very nice in that regard. And then I'll just jump into the final trade here. Let me just clean this up a little bit. So the overall idea that I was framing up here was noticing this impulse move and just kind of looking impulse correction, impulse to the downside. So a bear flag. You can see I have also the arrows drawn here. And what I noticed was we had touch 1, touch 2, touch 3. The third touch was a very nice high test candle. Started to see a pretty solid retrace candle. Now, of course, it's not 50% of the entire move, but what I like to do is kind of visualize what that could turn into, especially since, again, we're on the 15-minute time frame. And what you'll notice, if I just jump in here, so I took entry on the retrace candle, and it was just pretty much immediately into this trade. Price was just overall corrective. Not really seeing a lot of movements. Keeping this overall kind of nature in mind, because we're not really seeing a lot of impulsive movements. It's very kind of descending, so we could actually be seeing, something to that tune. So I definitely kept that in mind, which is why I moved my stop loss to break even. And it was actually, yeah, at this point I decided to move my stop loss to break even. Just seeing this overall kind of corrective nature, I was hoping that if we corrected to the upside here, we could see a more complete impulse to the downside, but again, we didn't get that, and this overall descending channel was just becoming more clear as each 15-minute candle was printing. So if I just keep moving forward here, you'll see that price began breaking to the upsides, and ultimately stopped me out for 0%. Neither profit nor loss on that case, and really just price just began trickling, and as you can see, this would have just been a 1% loss, and it really goes back to taking the message from the markets. I took this ultimately because of the third touch. I had a lot of confirmations. We had this kind of overall arcing behavior, impulse to the upside, and then a retrace, but always asking myself as price is progressively continuing, noticing the overall corrective nature. That ultimately was a big factor for me to say I'm going to limit the risk on this trade because something is just not setting right with me, and I'd rather take a break even than a 1% loss, and then I can take that lesson away without the frustration. So it's definitely something that I strongly suggest, just being present with what the market is really explaining to you. It's going to help you make those small 1% tweaks that are really going to help improve your trading overall. I hope there was some value on this trade setup, and I look forward to seeing you in the next one.